Okay, so how do you structure this investment for yourself, right? How do you make this work? Okay, so if you want the most liability protection, again, talk to an attorney about structuring this, okay? But these are some ways that I've seen done and really help to segregate assets so that they have their own protection and you have a lot of protection here, okay? So we're going to talk about this in terms of real estate and businesses because the structure would be honestly pretty similar if you do it either way. So what you want ideally is to have every property or every business contained within its own LLC. So you go out and buy a rental property, you buy it in an LLC. Now that LLC revenue and everything like that is going to pass through to whatever other entity, if it's the person or another LLC that owns it. Okay. So from an income tax perspective, taxes flow through these entities to the final place, depending on your status. Okay. But as far as liability, the liability of that property is contained there. Okay. If you own 3 rental properties and you have them all in one LLC, well, guess what? If something happens at one property and you are sued, they can reach through liability. For liability purposes, they can reach through and get the assets of that property, but also all the other assets in the LLC are up for grabs. So that means you put your other 2 properties at risk. You haven't segregated this. They're all in there and all up for grabs. Same with a business. If you own 3 businesses, if you own them all within the same LLC, something happens in one, they can reach through to the whole LLC and take any assets. They're all up for grabs. So you don't want that. You want to limit this. You want to segregate them. So each property in its own LLC, each business, its own LLC. Okay. That keeps it very, very clean and limits your liability overall. So one business venture or one real estate property or real estate project does not jeopardize or put at risk all of your others. All right. So if you have this structure, let's say you have rental properties, you've got 3 rental properties, all in their own LLC. To make things easy, you can have one holding company LLC. This is where holding companies come in. You can have a holding company, which is just another LLC, and that is the entity that owns the other LLCs. So you don't have to own the LLCs personally. You can have an entity own those, and then you own the entity. Okay, so you set up Dave Lowell Holding Company. I do, not you. I set up Dave Lowell Holding Company. I own 100% of it. And then that Dave Lowell Holding Company opens up LLC 1, LLC 2, LLC 3 that all own their own rental properties. Okay. So they're segregated. All the taxes pass through to one LLC. And depending on that designation, it might pass through to me or it could be taxed at that level. I'll talk about that again in the tax module. But that is how it works. If you have a trust, the trust does not really provide legal protection if it's a revocable trust, right? Like a living trust. It passes through. Taxes pass through, liability passes through. If it's an irrevocable trust, that's a little bit different. That could provide liability protection. But if it's a living trust, a revocable trust, everything passes through. And so if you have a living trust in that structure that we talked about before for estate planning, you could have a living trust. That living trust could own the Dave Lowell LLC, the holding company, and then that LLC owned the other LLCs with my businesses or real estate. If that does it, then I have liability protection. I've got asset protection. I have protection in terms of my estate plan so that my interest in the business, when I die, the trust still owns it. And then the trustee can handle it from there. So there's no transfer there. There's no complications. And then from the tax standpoint, everything flows through either to me personally or stops at my LLC that is taxed in a certain way, like an S Corp, for example. So it's very common to have, if you're in a partnership, it's very common that passes through, the total income passes through in a partnership, like in a multiple member LLC, you have multiple people, owners, net revenue passes through to them. And if they own their share, their partnership interest, if they own it, they're taxed at a regular rates plus self-employment tax. But they might have their holding company LLC be taxed as an S Corp, and then their other LLC interest where they're a partner and they receive their partnership interest, it could flow through to their LLC that's taxed as an S corporation, and then they get taxed on that level. And then it moves on to finally the personal tax return. Okay. This will be more clear in the tax module when I talk about this in detail with taxes. But as far as liability and legal entities, that is how it's done. Okay. So I hope that answers a lot of questions and clarifies what that means, and also clarifies the structure. So as you move forward, you can kind of organize it and really have it in place. Again, consult with an attorney on all of this, especially the more complicated it gets. The professionals are worth paying for. Just pay them to do their job. Okay. Tax and legal advice are crucial to making all of this work the right way. Okay, that wraps up this video, and we'll move on from there.
Protect what you're building, structure it the right way.